Hi there traders, this is Steve Miley, the market chartist on behalf of forextraders.com, and we're now taking a look at both the euro and the pound, both against the US dollar. Both these currencies, both the euro and the British pound, rallying for early 2019 in here against the US dollar, primarily being driven by US dollar weakness, a more dovish tone from late 2018 from the Fed running through into early January 2019, but Jerome Powell particularly dovish in here for the beginning part of the year. The FOMC minutes yesterday reinforcing that dovish tone, and we've seen this surging rally in here for the beginning of the year, down from just above 113.08 yesterday, taking out this peak that we put in, this kind of little head fake breakout, this fake out that we had at the beginning of the year above this key 115 level, and we went up to 115.45 at the beginning of the year, but back up through there, back above 115, back above 115.45 yesterday, and that reinforces an intermediate term bullish shift for the euro, aiming the market still higher, maybe towards 116.17 as we go into the second half, into the middle of this month, and maybe even higher targets towards 118 into the second half of the month. Similar but not quite as positive technical story for the pound. The pound being driven lower at the very beginning of the year by the flash crash that we saw during the illiquidity that saw both the Australian dollar particularly set off, and then and dollar yen particularly set off in here, a rally for the yen. So we had that flash crash at the beginning of the year that took the pound versus dollar cable down below the December low here at 124.76 down to 124.37. But the subsequent rebound again primarily being driven by US dollar weakness, partially some positive pound tone in here, some hopes in here of rejecting a no-deal Brexit, potential for a second referendum growing. So the pound actually getting a small bid in here as well as being US dollar weakness, and real threat back up to this this peak in here from late 2018 at 128.15, and then we have this whole succession of peaks here between 128.40 and 128.64. Should we get through there, we feel that then that neutralizes the intermediate term bearish pressures, and maybe even above 129.28 up here would signal an intermediate term bullish shift. This has been Steve Miley, market chartist for forextraders.com, and I wish you a great trading day.